I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to my new website, KalilaReynolds.com, to subscribe to our newsletter. You can click the link up here or in the description box below. Now come on, let's get this money!
First up, NCB Capital Markets Limited is set to launch a suite of alternative investment solutions through a newly formed company, Stratus Alternative Investments SSC. What's this all about? We'll find out more from Assistant Vice President, Alternatives and Funds Management at NCB Capital Markets, Simone Hudson. And later, the analysts weigh in on the latest market developments. Kingston Properties is considering going to the market with an additional public offer, and Playa Hotels Resorts N.V. has recorded a greater loss of $78 million when compared to the previous year of $30 million. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Bank of Jamaica BOJ has given its approval for Lasco Financial Services LFS to test its electronic commerce payment system LascoBiz within its fintech regulatory sandbox. The sandbox allows approved participants to test innovative financial products, services, and businesses in a controlled environment. LFS was the first out of the sandbox around September. LascoBiz will allow small and medium-sized entrepreneurs to accept card payments electronically on a website or through the use of payment buttons. The platform will provide them with simplified inventory management and financial statements. Upon full approval, Lasco Financial Services will make the service available to the general public. The government has made it easier to track public investment projects such as road construction and government reform with the launch of the Jamaica Investment Map. The interactive online tool was launched on November 4 in partnership with the Inter-American Development Bank (IDB). It has opened up access to information on some 78 projects being funded either by the government or donor agencies and allows citizens to provide feedback on interested projects. Minister of Finance and the Public Service Dr. Nigel Clark says the platform, the first in the English-speaking Caribbean, will ensure projects run effectively and efficiently. Sagicor Bank Jamaica has gone mobile with its banking services with the aim of reaching underserved and underbanked communities across the country. The initiative should also help the bank gain market edge in a highly competitive sector of which it holds around 10% of market share. The bank started its Bank on Wheels store in Spalding, Clarendon on Monday. Citizens are able to open accounts, make deposits or withdrawals, and carry out debit and credit card services at the unit, which operates from 10 a.m. to 2:30 p.m. daily. The unit will be in Clarendon for 6 months. Securities firm Money Masters has created a real estate company that it aims to capitalize with equity through the private market. The company hired former mortgage banker Dr. Patrick Telwell to lead the new operation, which will look to raise $1.5 billion in a private placement of shares. The private placement will open on November 12 and close on December 10. In a year's time, Money Masters Real Estate and Infrastructure Investments Limited will then seek to go public by way of listing on the Jamaica Stock Exchange. The parent company will act as the lead broker to the private placement. Institutions and accredited investors viewed as wealthy are eligible to participate in the offer in $10 million tranches. Supreme Ventures has successfully raised $3 billion through a fixed unsecured corporate bond on the Jamaican capital market to finance its expansion plans. The 25-year bond matures on October 30, 2025. SVL Chairman Gary Peart says the funds raised will be used to finance the gaming company's expansion plans. Last year, the company acquired stakes in Champion Gaming Company and Post-to-Post Betting, which trades as AnyBet. SVL wants to increase its stake in these two companies with the additional capital. Knutsford Express now allows pickup services for business customers sending packages, which forms part of its revenue diversification strategy due to the travel fallout from COVID-19. Knutsford revenues fell in its 2020 financial year ending May when compared with 2019. Revenues suffered as the company was forced to suspend travel for nearly 2 months due to the pandemic in early April. Knutsford installed new software, which enables it to start allowing courier-type pickup services. It will allow business customers in Kingston with multiple shipments to pre-enter items in the system ahead of time and have a company vehicle pick up the package. They're also looking to introduce more intermediate stops along its various routes.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. When we come back, we'll talk alternative investment solutions. This segment of Taking Stock is brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. NCB Capital Markets and Alternative Investment Solutions? What does this mean for the regular investor like you and me? Well, here to break it all down for us, we have Assistant Vice President of Alternatives and Fund Management at NCB Capital Markets, Simone Hudson.
Hi, Simone. It's great to have you.
Great. It's wonderful to be here, Kalila. Let me first say congratulations on the launch of your website.
Thank you.
And on your new venture.
Thank you so much.
It's an example of how we can really grow and pivot in order to capitalize on the opportunities that are present in the market. So congratulations.
Absolutely. Even in the middle of a pandemic, right?
Correct.
Okay, so one of the things that is hot right now is alternative investments. We've seen the success of guys like Cygnus, and now NCB Cap is entering the space in a big way. Before you tell me what you guys have up your sleeve, just set the space for us, set the groundwork, and explain what is alternative investment.
So you are correct. Alternative investments have become pretty topical across the region. Investors would have been pretty familiar with traditional stocks and bonds, but especially in these unusual times, we're dealing with a global pandemic. We're dealing with a president who is suing states. Right. We're dealing with pretty unusual circumstances, and this has resulted in increased volatility on traditional investments. So we're seeking for ways to boost your returns or to enhance those returns, and investment in alternatives will help to do just that. So in a nutshell, alternative investments are just options outside of the traditional stocks and bonds. So it can be as familiar as real estate or private credit, and it can be as unfamiliar or exotic as investments in infrastructure, commodities, distressed debt, or opportunistic credit, or venture capital. So that is in a nutshell what alternative investments are.
Okay, so now tell me how NCB Cap is entering the space.
So we are looking to enter the space pretty soon. We are building an alternative investments platform that will host several themes. So we hear about alternative investments in the region from time to time, but the discussion, I think, is pretty limited to private credit and real estate opportunities. So we're exploring the full gamut of alternative investment themes. We're looking at things like infrastructure investment, how you can benefit from the opportunities created by COVID. So we're looking at an opportunistic fund or an opportunity fund. We're also looking to extend a partnership that we currently have with a company that is also involved in alternative investments, the management of alternative investments. So we're looking to scale that. And we're building out a platform that will cater to a variety of investment risk profiles and needs in the market.
And you've come up with a name. So you already have a company. Is the company live yet? It's Stratus Alternative Investments, I believe it's called.
So the company is called Stratus Alternative Funds SSC, and it has already been established. But as soon as we're able to, we'll provide more information on that.
Okay, so all right. So our people, explain how it works. So is this something that NCB Cap is doing for itself, or would ordinary investors be able to buy into this fund?
So it is something that we're looking to launch and eventually present to the public. However, we have to go through the regulatory approvals. So at this time, it is not yet available to the public, but the vehicle has been established.
What types of timelines are you looking at?
So we are looking to launch pretty soon. I would say by the first quarter of 2021.
Mm-hmm. And this would be something that would be listed on the stock exchange?
It depends on the avenue that we eventually choose. So it could be listed because we want investors to participate and not just institutional investors that have large sums of money who will be able to access these types of investments. We want retail investors to participate or be able to access alternative investment opportunities.
From what I understand, NCB Cap is doing, you're not just looking at Jamaica, are you? So this is something that you're looking at for the region. Tell me what countries you are pursuing or you're already in.
We have the largest regional footprint throughout the Caribbean. So we have a subsidiary in Trinidad and Tobago. We also have a subsidiary in Barbados, as well as in Cayman. And those target all the areas in the Caribbean. In addition, given our affiliation with Guardian, the NCBFG group owns 60% of Guardian, we have a footprint in 20 plus jurisdictions. So we are looking to capitalize on that, and we're looking for investment opportunities throughout the region. So we're looking to build the Caribbean through these alternative investment solutions.
It interested me when you said you're looking to invest in infrastructure. So what immediately came to mind in Jamaica is TJH, Trans-Jamaican Highway. But what things are you looking at? Because you mentioned Trinidad and Tobago, which is big in oil, and you mentioned commodities as well. So I'm just putting two and two together here. Any investment in regional oil or anything else that we should know about?
So we are looking to capitalize on the opportunities that are present in each jurisdiction. So you said that in Jamaica, you immediately what came to mind was TJH. We also have a drainage problem, as was highlighted with the recent rains, right? So it actually creates an opportunity for us to look to partner with different issuers who are willing to take on these projects, right? So if there is someone out there that wants to engage the government or partner with the government to find a solution to our drainage issues, then we would be willing to sit at the table with those partners. Guyana has a newfound income source.
Right, yes.
Right? And Guyana has become a hot topic. So
I should have mentioned Guyana indeed with all their oil. Mm-hmm.
The problem with Guyana, though, is that the infrastructure is weak, and there is a need for development of the basic infrastructure to kind of channel the private sector participation as it relates to the growth opportunities. So we're just looking at the opportunities in the different markets and to see how we can present those.
When you say infrastructure is weak, that is also a big opportunity for you all to jump on and invest in. So there is a lot that's going to be needed, and there will be money that will be needed to do it.
That is correct.
So do you have an idea yet how much money this fund is going to be seeded with? How much will you start with?
We have an idea. I mean, we're well advanced in terms of the establishment. As I said, the umbrella vehicle is already set up. We have a board that has regional representation. So we have a board that has a regional representation. We are looking at different partnerships with different investment managers. And we are just ensuring that it is set up in such a way that when the opportunity is right and ready, we will have the people and the governance structure in place that will enable us to capitalize on those opportunities. So it's because of the fact that it's regional and because of the size of the opportunities that we're looking at, we're not talking small, right? It's very significant. But I can't tell you.
Just give me a ballpark, just a ballpark.
And then I'll get in trouble with the regulator.
You said not small. Give me a range then.
It could be significant.
All right, not small and significant. Let's take those cues. So for the ordinary investor now, if we are considering alternative investments, what are some of the things that on a personal level we should be looking for?
So that will depend on whether or not this is an indirect investment or a direct investment. So the essence, though, is that you have to assess the cash flows, right, and the sustainability of those cash flows. So, for example, if you're looking at a real estate opportunity, you want to look at the strength of the tenancy agreement. So, let's look at the leases. What is the percentage occupancy is there in the building, right? The strength of the tenancy arrangement comes into place. Is this a triple net lease? Is it that you're getting the monies that are left over after all the expenses that are related to the efficient running of the property are paid by the tenants? So you look at things like those. For infrastructure investments, it's about cash flows as well. So you look at things like the usage and the traffic and so on to determine the viability of it. When it comes on to a fund, so if the alternative investment opportunity is presented as a mutual fund or a company, then you want to delve deeper in the management and the governance structure. So are these investment managers reliable? Are they reputable? Have they been in the business for a long time? Do they have a strong track record in investment management? And then how are decisions made? Are decisions made by just the investment manager, or is there a governance, a strong board that is in place that will ensure that the managers are actually doing what they're supposed to do, right? So you have to delve a little bit deeper when you are paying an investment manager to look for these opportunities on your behalf, because after all, you're giving them money. They're being paid for this, right? So the strength of the management and the governance structure is very important when you are looking at investment vehicles that provide alternative investment opportunities.
And what type of risk profile are we looking at here? Is this more for the conservative investor or the adventurous investor?
That will depend largely on the type of alternative investment solution. And this is why it is important to present a wide range of alternative investment solutions that cater to a wide variety of risk appetites. So, for example, infrastructure investment, I think that could cater to the between a conservative and moderate risk profile. And then if we're looking at something like an opportunity fund or venture capital investment, then that is a little bit more risky. So you want to ensure that the investors that participate in this particular theme are those with more aggressive risk tolerances.
So Simone, tell me, I know you said that the team is still being built and it's going to be a regional team, since you do have alternative investments in or potential alternative investments in Trinidad, Barbados, Guyana, across the region and other countries as well. But do you have, who's leading this initiative? Who's at the forefront? Is it you?
So I am the head of alternative investments and funds management at NCB Capital Markets. So yes, I am leading the initiative.
Okay.
However, we have the full muscle of the NCB Capital Markets investment banking and distribution units behind this initiative.
Any other names that we might recognize?
Stephen Gooden, Patrick Hilton, Dennis Cohen.
Okay. Yes, the full team indeed.
Yes.
The full team. All right. Well, all the best. I look forward to more details when you're ready to launch Stratus into the stratosphere.
Well, thank you. And we'll share the additional details when we are able to. Thank you so much for having me.
Thank you, Simone. Bye.
Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agent, Insurance Made Easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing less than 2%. 100 stocks traded across both the main and junior markets of the JSE for the week ending Friday, November 6, 2020. 45 advanced, 44 declined, and 11 stayed the same. Nearly 63 million shares changed hands on the Jamaican dollar market, totaling $734 million. Grace Kennedy traded the most, taking up 10% of market volume. The stock gained 61 cents to open the week at $57.99. Lumber Depot traded the second highest, with people buying and selling 6 million shares in the company. Lumber's stock gained 5 cents to open the week at $1.29. And QWI Investments rounded out the most traded, taking up 9% of market volume. The stock lost 5 cents to open the week at 71 cents. Now let's see who had the biggest gains. T-Tech jumped 34% to close last week at $6.70. KLE Group rose nearly 32% to close last week at $1.45. And Lasco Financial Services shares rounded out the biggest gains to close the week at $2.65. On the losing side now, Palace Amusement Company fell 27% to close last week at $1,082.72. Community and Workers of Jamaica CCU deferred share fell nearly 14% to end last week at $1.72 a share. Margaritaville Turks USD lost 13%, down to 13 cents USD. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by equity trader at JMMB, Clive Charlton, investment analyst at Proven Wealth, Julian Morrison, and business writer at The Observer, David Rhodes.
Hi, guys. Welcome back.
Hi, Kalila. Morning.
So, a lot of things going on the market as usual. We have our eye on some things coming up. Clive, what's up with the market right now? What are you interested in?
Well, I like a basket. I always speak. I'm fairly encouraged people to be a little bit conservative sometimes, So start first with a basket of stocks from different sectors. But I think overall, the market, I say in the medium to long term, that's how I speak to investors. In the short term, in the medium to long term, looks good. COVID was a gentle, but I think by now we're getting used to COVID. I think on the side, we're working out how to handle ourselves. On the business side, on the school side, I think things are still being worked globally. Jamaica is not the only country. So I believe we will at least learn how to live with this COVID, and we are getting back onto the track of some level of normalcy, including businesses. As a matter of fact, I think businesses are excited now. They said that there's sometimes a silver lining behind a dark cloud.
Yes.
And for businesses, it usually is a time to regroup, to retool, to restructure, to reorganize, and many of them use it as an opportunity to cut back on costs. Not because revenue has fallen, but every time something like this happens, businesses uses it as an opportunity to cut back on costs.
Yes.
They may come out of the pandemic somewhat smaller in terms of size, but more efficient.
You want to preserve that cash flow, which is always wise in a time like this. So, but what is the trend that you're seeing as it comes to raising capital?
Good. One of the major trends I've seen is interestingly, and I think is the raising of capital through additional public offering. Barita broke the ice, and with a huge amount of money, 260 something million shares, raised about $13.5 billion. They were looking for a target of 9 and upward. They broke ice. I think more companies have used this, looked at this, and said now is the time to at least to begin to seriously consider and put this on the table. And several other companies, well, prior to that, between December and January, February, quite a few companies had it on their table already. We talk about Panjam, we talk about Proven, we talk about Cygnus Capital Investment Managers. But some other companies have come on the table now, and we see quite a few of them gearing for this. Can they do it? I believe they can. In the marketplace, even though we talk about employment, cutback in perhaps income of individuals, but I think more that's the 5% participation rate. The JC says there's a 5% participation rate in the marketplace. Last year, an increase of about 1.5% from 2 years before. How that is measured, I can't definitely go into the
Okay, just stick a pin. When is the 5% participation rate? What are you referring to? 5% of what?
Okay, and I think as I said, the technicality, I'm not sure how JC came by that, but what the definition they've given is persons of the percentage population that is participating in the marketplace. Employed population that is participating in the Jamaica Stock Exchange. Exactly how it is measured is something else, right? But that is the basic definition. So what I believe, persons have been saying, but if people are unemployed, where's that money coming from? Well, there are persons who came out of the market and is holding cash. There are persons who did not come into the market during the COVID time. They are holding cash or liquid asset. And then there are brand new people also who have a little mickle. They say, every mickle make a buckle.
Yes.
Who have a cent. And big investors, managers, and companies now realize that every mickle make buckle. So when they come public, they can raise much more than their private partners, usual private partners can put into the bucket. You see, they realize that there are 1.something million Jamaicans that have multi-mega billions of Jamaican dollars put together that can make their business grow.
Absolutely.
That is what is recognized in the marketplace now.
Absolutely. There's some more people watching shows like Taking Stock. The interest is definitely there. You mentioned coming to the market and the APO trends. So David, that brings us to Kingston Properties. What's the latest with them?
Well, Kingston Properties released their results early this week. It was called in a way up tenfold for the net profit, and that was significantly influenced by the recent acquisitions they've done. So, because of the acquisition done earlier this year, one in the Cayman, one in Ashenham Road, and even recently last year, the one in the Cayman properties they acquired, you're seeing these accretive gains coming in later on in the period now. So, as I helped Kingston Properties in terms of boosting their, as you would say, bottom line. And Care Properties is coming back to the market probably next year, not sure as when yet, to raise more capital. But this time, instead of doing a rights issue, they do an APO. So they raised $2 billion in December for the rights issue, and they have a target of 10 billion JMD, which is about $68 million US in terms of their equity base. That's the target they're looking for. So right now, Kingston Properties is really and truly looking at greater deals to seize in the current environment. And right now they're still focused on, they're exposing some of the Canada properties they have in Florida as one would say repositioning for the upcoming shift in the overall real estate market.
Julian, how are you feeling about Kingston Properties?
Well, Kingston Properties is run by experienced professionals. They really have taken what is called an asset management approach to their business. It's not a matter of just buying properties and then reporting the rental income or other streams of income. Regarding the property portfolio, they really have been detailed with their reporting, their strategy, they've been transparent. And the last time I looked at their financial statements, they actually have had better performance compared to the last 3 years or so from my memory. So I have confidence in KP REIT based on their expertise and the level of experience they have, because they have at least 10 years in the game as a listed company.
And Clive, for you, what does the APO for the upcoming APO for Kingston Properties, what are your feelings on it?
I think it will do well. I think it can and will do well. With respect to REITs, the market is still waking up to REITs, but I'm not sure if it's that they do not properly understand. REIT is investment in property. Many Jamaicans understand the concept of property ownership. We seek to own our own home. and its ownership in property value more or less will almost always go up in most economic conditions. Property value will go up. Of course, rental income, will ebb and flow with economic activity, but the value of property will go up. So these are undervalued. It presents a great opportunity. It's already undervalued based on its PE, price earnings ratio, and price to book especially. I expect though with KP REIT, I think they're going to have retail investors, but they're going to have a lot of fund managers and high net worth and institutional investors who are usually very much interested in these types of products.
The thing about REITs is that, well, in Jamaica, they're not true REITs, so you don't get the tax benefits that you get from being designated a REIT, like in the United States. But Clive, you also mentioned that in most situations, that property values will go up, the vast majority. But isn't that the danger that we fell into when the 2008 recession happened? Because property values, everybody thought exactly what you just said, that property just always goes up.
Well, true, income from property will always ebb and flow with the economic activity. We know that commercial property, if there's a slowdown in business activity, commercial property will usually go up. We know that if we lose jobs, etc., residential property may go down, but usually this is quite temporary. And I can tell you that one of the assets to recover quickly when the economic tide turns for the better is property. Property value will appreciate so significantly, so quickly and so significantly, but education especially, and commercial property more so. So yes, we do have the ebb and flow. We have seen the recession in some property and property linked investment options, but usually when there's a turn, that's one of the assets that usually recovers quite quickly. And that's the expectation. That's what I expect that that KP REIT is relying on.
Which is why we see property values in Jamaica and the United States right now maintaining their value. We haven't seen a dramatic drop or much of a drop at all, despite COVID-19. But David, let's turn our attention now to Playa. So Sagicor Real Estate X Fund is still heavily invested in Playa, and Playa has announced some results. So what's going on there?
So Playa is a hotel operating company which is mainly based within Mexico, Dominican Republic, and Jamaica. And Playa released the results earlier this week, and they reported a 70% drop in hotel revenue for the same period last year. And they actually performed worse than analysts expected. So in the US and other developed markets, analysts give their expectations, and there's an average taken of analysts' expectations. So analysts are expecting Playa to record a negative EPS, earnings per share, of 45 cents. However, Playa ended up with a negative EPS of 58 cents, which shows how much worse they actually performed compared to what the, as you say, analysts were expecting. And when you go down into Playa's information, you get basically an introspective into what's happening in the Caribbean and Jamaica, because most of Playa's resorts in Jamaica are based along Montego Bay and one Runaway Bay right now. So
these are the jewel resorts, right?
Yes.
The jewel properties.
So, well, remember they sold the 2 jewel properties back in May to the Sandals Group for $60 million, and they currently manage the Jewel Grand Montego Bay, which Sagicor Real Estate X Fund has a 23% stake in.
Right.
So the Jamaican segment, they overall segment itself for the occupancy of 16.6% for the quarter compared to 8% last year, which is a steep decline, and still gives as you say, a more accurate reflection of what is happening along the North Coast and in the general tourism market. But the overall portfolio for Playa, they only had about 11% occupancy, and that's really and truly defined as the number of rooms sold with respect to rooms that are available. So the Playa operation in Jamaica is about 1,428 rooms. So that occupancy rate basically comes out to about 237 rooms that were used booked out during the period. And remember, Playa only mapped their resorts in Jamaica on July 1, so they'd have lost out the entire month of June. Sorry, not June. They'd have basically not performed for the prior period. And the thing about Playa is that because Sagicor Real Estate X Fund, as you would say, owns Playa as an associate, and Sagicor Group Jamaica accounts for X Fund as a subsidiary, anything that Playa reports, part is going to end up on X Fund's income statement, and part is going to end up on Sagicor Group's income statement. So right now, I'm expecting when the results come up for Sagicor X Fund and Group, you're going to see probably around $1.7 billion in share of loss, which is as you said, the associated accounting principle for the associated companies. And here's about it.
But you know what? So X Fund and Playa weren't doing so great even before COVID. So they already had some not so good looking numbers being reported pre-COVID, and now with this hit to tourism, it's even more exponential. Julian, is there any hope for these companies?
Well, one thing I would say is that it's definitely a test for those who have patience, because when we invest in these assets, sometimes we're tempted by quarterly numbers to focus on a short-term horizon. However, because of these kinds of systemic risks, such as recessions and natural disasters, it will cause immense or abnormal stress on certain industries, as it has in tourism. So within that context, it would necessitate for investors to look further than they normally would have to realize the value that they would have got. So the key is to have more of a marathon in mind as opposed to a sprint, because we've all become spoiled. Oh, Sagicor, they must do well, they must do this, they must do that. Nothing is a must in investments, and that's why it's important to manage risk and to keep the horizon extended and to pay attention to what is happening.
Clive, I always like hearing your perspective on things. What's your outlook for Sagicor X Fund?
Interestingly, the X Fund, when it was first listed, it was doing fairly well. Paid dividend, price was going up, started off a little slowly, and it was doing well. This deal with Playa opened up a whole bag of opportunity. We kind of reduced their exposure, because by acquiring this wider global portfolio, which is largely based in Latin America, Central America, and the Caribbean, but they really diversified. They should have diversified the risk. What we did not expect was a global threat that would have wiped out NSL, just not tourism and travel out of the waters. And it comes with it, this is what you call risk. When you take these plays, the risk potentially exposes it to the downside, but it also has opportunity for the potential significant, upside. It is a slow recovery. Playa itself was a strong company. They have raised, I think it's about 1.6 billion US in the capital market just recently, and this is really just to support flow, not for capital development enhancement. You see, so it really is not being and it is 22% is what Sagicor through X Fund owns of Playa. So it will be a challenge on their books for a little while. And I think it's going to take a little while for X Fund itself to recover.
When you say a little while, what type of time frame you're looking at?
Well, it's I really try. It's very difficult to put a time frame on it, you see. But let me just look at some figures here. We have a book value. This book value is less than 138 student living, less than Caribbean Property Fund, less than KP REIT. We're looking at these property-based investment options, right? This is not officially a REIT, but it probably is, right? It has a negative earnings per share, unlike Caribbean Property Value Fund, 138 student living, and KP REIT. You see? We are impacted by a marketplace. It's not just a Jamaican domestic tourism market, that Americans are just dying to come back to buy next year and perhaps may take the risk. It is the Mexican, Latin American market that is usually visited by a lot of Europeans who are going through a second and third phase of COVID and a stronger lockdown. So their psychology is different, So I think this in probably will take in excess, probably a year and a half or two, Playa to recover. And I'm not just talking recovering in terms of tourism numbers, but the books, fundamentals. It will take probably another year and a half to two.
I think even that's a bit optimistic.
Well,
to
you're
be
quite
honest.
right. You're quite, I think so. Yes, you're right.
Yeah.
But what we're looking at is the total impact on X Fund, we know the impact. It will be significant. What will be the total impact on a Sagicor? what we have noticed also, which is sometimes can be of a concern, sometimes it's difficult, it seems to be difficult to get the numbers, to put the numbers together. Over the last year and a half or so, X-Fund 34 has delayed the publication of its financials because of X-Fund, because of input of Playa. You see? So sometimes we're wondering what else is happening in the background, you know? Are they as properly organized, structured, you know, we wonder. But it's going to take a while for them to recover. It's going to take, you know, as you said, I put it at the lower in 2 years. It could be a little bit more.
What was unique about the 2008 recession regarding properties is that there are instruments called collateralized debt obligations. So these are instruments that allow investors to invest in debt linked to real estate. What happened is that the market became drunk on these instruments. There was excessive borrowing tied to these instruments because people don't buy the instruments with just cash. They borrow to buy them. So they borrow to buy the instrument, and somebody else borrows to buy the other instruments, and it just kept on building up into a major debt.
But do you think we've learned our lesson from that, and we're not likely to see that situation recur?
Firstly, greed partially drives the markets. Markets are largely driven by greed, not totally, but partially. So maybe to an extent. But the good thing is the regulators have stepped in and added more limitations and features in terms of regulations to those kinds of instruments. So it's not as easy for that situation to happen again because of those regulatory changes.
Yeah. Let's look a little bit abroad. So at the time of recording this, we still don't know who the US president, the next president is going to be. It's looking very likely like it's going to be Biden, but who knows? With Trump in the mix, anything goes these days. The stock market there, so Julian, you're eyeing Chipotle. Why?
Chipotle is actually a very prominent name in the quick service space for restaurants in the United States. But the thing is that even though Chipotle has revenues that have held up because they've grown their 9 months revenues 5.6% year over year as of their 9 months performance, their revenues have actually held up, but on the other side of it, their profits have been under some pressure. So they closed at 164.81 million in terms of their net profit for their 9 months, and that would be lower by 40.7%. Now, the issue with Chipotle is that they have difficulty with cost controls, and where we're seeing most of the pressure is actually from operating expenses. So they took on a lease. We've seen an upward trend over the last 5 years or so with labor costs. We're also seeing an upward trend with their other operating expenses in general. So really and truly, for value creation for shareholders, it's good if Chipotle could focus on efficiency. If they can just continue to perform in terms of their sales and find a way to become more operationally efficient, they would do a lot better. And within that context, I think that the price is trading a bit rich. It's over $1,500, I believe, per share, about 1,600 and so. I don't remember the exact number. I think it's 1,637 the last time I saw it. It trades on the New York Stock Exchange. It's not much of a dividend player. It's more about getting capital gains. However, it has been a growth stock. It's heavily followed by large institutions, which is a part of why it has had such a large increase in its price, because many large investors are actually deploying capital into it. It's an attractive brand because of its pace of growth. However, they really need to become more efficient in order to create more shareholder value. The positive thing is their balance sheet is healthy, their capital structure looks good, and their operating cash flows are good. So it's just a matter of becoming more efficient. So maybe digitization could be something to look at. We know that quick service restaurants are very competitive right now. Yes. And we're also in a recessionary landscape. So consumers might be a bit more picky in terms of price. And we know affordability plays a large role in choosing a fast food option. The thing is that Chipotle is not like a Domino's or a Burger King.
It's more in
a little bit
the
more
mid
premium.
price.
Yeah, it's
Yeah.
more premium. That's right.
So like a
So
$10 for a meal, $12. Yeah.
that's right. So their goods might be more price sensitive than other options, which could also face another challenge within the context of consumers making choices in a recession. But it's not terrible. It just might take some time for them to actually rejig the business, look at their cost structure, become more efficient, and then after a while, they could add more shareholder value within that context.
Thanks for the updates, guys. Always a pleasure.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com and turn on those post notifications so that you can be the first to see all of my videos. We want to help people learn more about money so that we can all get this money together. Now follow me on Instagram and Twitter at Kalila Ray and follow at Taking Stock JA on Instagram. If you want to connect with the analyst this week, check the description box below for their contact information. Now tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.